Hello and welcome to Analysts Flow. Today we'll be talking about another growth stock darling that recently got crushed in the growth stock crash. The company is looking to revolutionize freelancing and is looking to ride the gig economy wave. And it's also part of my personal portfolio, so let's look into the company. Fiverr, ticker symbol FYRR, has a market cap of around $3 billion. They employ around 800 employees and were founded in 2010. They're headquartered in Tel Aviv in Israel and are working in the freelancing and gig economy sector. The founder and CEO is Micha Kaufman. Let's take a look at the share price. We can see that since the IPO up until the COVID crash, the company pretty much trailed sideways. And since the COVID crash, it had a monumental run going up all the way up to $270, up around 700%. Since then, the company crashed with the whole growth crash in the last half a year. The company is still up 128% since IPO. If we take a look at the ownership structure, we can see that there are two interesting owners here. The first one is Micha Kaufman, the CEO and founder, who still owns around 5% of the company. I always like if you have an owner-operator leading the company, so that you know that management has skin in the game and their incentives are aligned with shareholders. And then we also have Jonathan Kolber, which is a part of the board of Fiverr. So once again, another insider holding a large equity stake in the company with 8%. If we have a look at the analyst ratings, we can see that currently there are 3 analysts with a hold and 3 with a buy rating. The average share price right now for Fiverr, or the consensus target I should say, is around $170, while the share price is trading at around 70. So analysts see a substantial upside in the company. In the past, with the whole run-up from COVID, analysts consistently had price targets under the share price, but that switched once the whole correction and the whole crash, I should say, happened. So now let's look at the business model for Fiverr. First, let's look at the roadmap. Fiverr is a technology company at the core. We can see that when they started out in 2012 to 2016, they had a simple website. Then they added new services in 2017 to 19 with the Learn platform, where freelancers can learn how to better operate their gigs, and also things like Fiverr Pro and Fiverr Choice, and workshops, just additional services to give the buyer and the seller more options. In 2020, Fiverr added Fiverr Business, which is a offering looking at corporate clients, and also a direct attack at their competitor Upwork. They also added promoted gigs, which basically means that sellers can promote their gigs they are offering, so a advertisement revenue stream for Fiverr. They also added internationalization with non-English sites, like for example the German site. And they also added milestones, which means that if you have a larger project, for example, a big software development project, you can put milestones, for example, the first sprint release after 2 weeks or something like that, and then also have payments after every milestone. In the last year, they added subscriptions and other features like Stoke Talent and Creative Live. Especially subscriptions are interesting because it enables people to basically subscribe to gigs and, for example, buy a gig every month or so. So that adds more stability for the revenues for freelancers, which is very important because freelancers, like the name says, are their own boss and they need to have a consistent revenue stream. Otherwise, they might have to quit and go back into a normal job, which wouldn't be great for Fiverr. Fiverr's mission statement is to change how the world works together. So they have an emphasis on being the future of work. They made a little comparison here between the traditional workspace and the work on Fiverr. Normally you would have long-term employment, work in an office and have local teams. You would most of the time work offline and work all the time for a monthly salary. You would study young and then find a profession and then stay in there and have a stability, but often be locked into a system. The future of work is an experience building and freelancing. You can work from everywhere, like as nowadays it's called being a nomad, pretty much being able to travel from place to place and work from wherever you want. You have global and remote teams. You work digitally and leverage collaborative tools. And you get paid for actions and results, not just for time spent. You have to continuously study and gain new expertise and keep learning and developing yourself. And that should lead to more fulfillment. I personally think that's the case, and I also see that in myself. I'm 23 right now and I couldn't see myself doing the same job at the same company for my whole life. So that's also why I'm pretty bullish on the company here. If you want to buy a service on Fiverr, you go onto the website and see the huge service catalog with hundreds of categories and thousands upon thousands of different gigs from different sellers. Then you order through the website directly, tell the seller what you want them to do and start a communication. Fiverr for that receives 5.5% of the purchase amount as a service fee and additional costs too. Once the order is fulfilled and upon your liking, the order is delivered and the final payment is made. I personally had some experience with Fiverr and ordered the logo from my Seeking Alpha profile a few weeks ago actually, and it was pretty straightforward. I just, like explained on the slide before, went onto the site, searched for a topic I wanted, gave my instructions and then placed the order. The whole process took less than a day and I was pretty satisfied with it all. That being said, my order was actually done on a weekend, so even then the response time was pretty high. The banner to subscribe that just played also was done at Fiverr, so yeah, I'm pretty satisfied with the whole experience you have there as a buyer. If we take a look at the total addressable market, we can see that with 115 billion, the market opportunity for Fiverr is huge. The total freelancing market is estimated to be in the US around 815 billion right now and expected to keep growing and taking market share from the traditional working. We can also see that most of freelancing is still done offline, with around 98% or so being offline of course. And like with e-commerce in 1994, freelancing will continuously migrate online, and Fiverr is here to help with that. Fiverr is describing their business as an e-commerce approach to freelancing. They have a service as a product model where you can buy and sell digital services as simple as buying on Amazon, with a comprehensive SKU-like service catalog. So basically that means, like we've seen earlier, that you have different categories, like hundreds of categories and thousands upon thousands of different gigs you can choose from. You have an on-demand process, you don't need to hire anybody, you don't have commitments, you just get what you need. You also have an end-to-end platform, so businesses can focus on meeting deadlines and freelancers can focus on doing what they love. No long overhead that you need to carry around with you, just focus on the work you need. And you have a global community where you can bring together freelancers from all over the world. You could be situated in the United States and get freelancing work done from Europe or other parts of the world, for example. The concept of selling freelancing is not new and there always have been staffing companies. But Fiverr thinks they have serious advantages over those companies. With staffing companies, you have short or long-term temporary employments. With Fiverr, you just have service as a product, basically. You don't have long bidding and negotiations about a contract. You just browse the catalog, you search what you want, you click and you order, and you see whatever you need to know at the click. No negotiations needed. You don't have a non-standardized process with a lot of timing and cost problems. You just have transparent timing and price and delivery on the site like promised, and an end-to-end platform. Fiverr wants to focus on the most important part of their business, which is of course their buyers and their sellers, and to make the work as comfortable and easy to do as possible. For the buyers, they want to be as transparent as possible, and they want to have a certainty of the price, scope and quality of the gig, and of course the speed as well. They want to offer value for your money, and they want to be a trusted brand for customer service. That ended up giving them a buyer net promoter score of 67, which is pretty damn good. For sellers, they want to have them not be bothered with bidding and negotiations to win projects, like for example their biggest competitor Upwork is doing. They want to maximize their deal flow, that they can focus on what they are best at, which is their work. So that ended up giving them a net promoter score of 80, which is even better, and brings them all the way on the top of the leaderboard for net promoter scores in the category. Fiverr's strategy relies on being a global company that drives the horizontal outsourcing of different services and processes for their customers. They have an organic networking effect which drives the majority of their new buyers. Their target audience are small and medium-sized businesses, or what they call 0 to enterprise. So basically they want to grow with their small customers. They want high value creation, and they want to drive high long-term value with repeat and cross-category purchases. So all is pretty much based upon getting good buyers and then keeping them and making them buy more and more services, because they are convinced of the good quality they get on Fiverr. We can see that the strategy is working if we take a look at two of the key performance indicators for Fiverr, which is the spend per buyer in dollars and the amount of active buyers in millions. With spend per buyer, we can see that since 2019 it went from $170 all the way up to $242. And also in the last year we can see that quarter over quarter it always increased. At active buyers we can observe a similar pattern. Since 2019 the amount of buyers almost doubled from 2.4 to 4.2 million. That of course also had a pandemic effect, so the big jumps here won't be sustainable, as we can see in the growth in 2021. We still had a continuous growth quarter over quarter, but it is slowing down a bit. But that's to be expected with such a pretty much once in a millennia thing like a global pandemic happening. Another interesting graphic to take a look at is their revenue composition by annual cohort. We can see that in 2021, 41% of revenue was composed of new buyers and 59% was existing buyers. We can also observe that cohorts that came into the system a few years ago initially have a drop in revenue and then start to accelerate again. And we can see that over all demographics pretty much and over all cohorts. What's also interesting is their return on investment on their marketing spend. We can see that they are very fast getting the amount of marketing spent back as revenue. And going back to Q1 of 2017, the buyers that got converted from marketing back then, since then have generated 4.8 times the marketing investment. So we can see that they have a very attractive 5-year long time value to customer acquisition cost here. So I'm fine with them spending as much on marketing as they want at this point. Another KPI I want to take a look at is their take rate. They have an industry leading take rate of right now 29.2%. So that means for every dollar spent on the platform, they are taking 29.2 cents. The take rate is driven by increase in service fees in the last year, especially from continued growth in back-end software subscriptions, e-learning courses, and content marketing subscriptions. Fiverr has been pretty busy doing bolt-on acquisitions, so that means they buy smaller businesses and integrate them into their services. That's, for example, how Fiverr Learn came into being, which is courses for new freelancers to figure out how to do their job more efficiently. Also Fiverr Workspace, where you can manage your entire business with Fiverr. And also content teams, which is another service Fiverr's offering to their freelancers, which then again adds to their take rate even more. So in the future, I see this take rate staying around the same level or even accelerate. There is some pressure on the take rate because since Fiverr is getting more and more business customers, which are paying a lot of money for services, their take rate on those gigs should decrease because large businesses have oftentimes a discount they are getting. And the most lucrative gigs they are selling are the small ones for around $5 to $10 because they have an additional service fee of $2, which as a percentage is much larger there. So that's pressure on the take rate. But then we have services they keep adding, which is a addition to the take rate. So I think it will roughly stay at these levels or maybe increase a little. Another very important thing to talk about with Fiverr is the data advantage they have. In the last quarter, they launched Fiverr Inspire, which is a new personalized browsing experience that enables buyers to discover sellers through real projects and deliveries they have completed on the platform. Because 100% of the workflows between buyers and sellers, including final deliveries, is happening on the Fiverr platform, they have all the data they want and can pretty much increase the quality of the algorithms with all that data. Because the algorithm will increase, Fiverr also thinks that freelancers on their marketplace mainly compete based on the quality of their work, which will then again help increase net promoter scores for sellers and buyers both. They also saw increased engagement from buyers through that feature because they spend more time on the app even if they are not immediately doing projects. So Fiverr also has some sort of social element now where people just browse content like on a social media feed just to get new ideas and stuff. Fiverr Business is another very important part of the business, which I already mentioned before. On Fiverr Business, you have a dedicated environment for business buyers to transact and collaborate. They have several advantages, like you have collaboration tools, you have a curated supply, so that means that you don't have all the gigs available here. You have a curated list of approved and verified high quality sellers. And you also have budget features so that you can, for example, set a budget for a campaign and then find gigs in that range. Fiverr wants to be a global company, so they are also expanding internationally. That happens by making their website available in all different languages. Coming from a German background, I think it's very important because a lot of freelancing here is done from locals that oftentimes don't really speak English, or at least not well. So having a German website really helps here. A relatively new revenue stream is advertising for Fiverr. This is done through promoted gigs. You have a CPC-based advertising platform that allows sellers to promote themselves on Fiverr. So that is a new revenue stream which generated over $1 million in revenue already, based on, I think it was Q2 numbers. So in the future, I think this will continue to grow and eventually be a significant part of their business. You can see the same thing happening, for example, on Amazon, where advertising has skyrocketed as a revenue in the last years. And it's pretty much the same. It's the people selling on the platform advertising their services and paying for that. And that also goes back to their data advantage. the better the data they have, the better the advertisement algorithm can be, and the more the sellers are willing to pay for the service of advertising their gigs. Fiverr, of course, isn't the only company in this space. The biggest competitor pretty much is Upwork. They have a slightly different business model though. Upwork isn't based on the buyer searching for a seller, it's the other way around. So pretty much on Upwork, the buyer is making a post, setting the requirements for the job, and then the seller has to apply for the job and go through contract negotiations until the seller gets approved for the job. So this pretty much is the way staffing companies work, in my opinion. And I don't think that's really the future of work. I think it's a much better experience for everybody if you just have to set up your gig once and then the buyer can look for the gig that fits him perfectly. This maybe doesn't work for all gigs, but I think the majority will work for that. And that's why I much prefer the business model that Fiverr is doing. And the interesting part is that Upwork mostly aims for business customers. And in the past, Fiverr was mainly for normal private people to do small jobs. But recently with Fiverr Business, they have started an attack on Upwork's market share. So that will be interesting to observe. Other notable competitors that are starting to compete is LinkedIn, and that will also be interesting to see because they also have a lot of professionals on the website, so they could actually take some market share here, I think. Before we get into the financials of the company, I would ask you to thumbs up the video and subscribe to the channel and leave a comment down below. What do you think about Fiverr? Do you like the company? Is it an investment for you? And in general, what do you think about them? So let's take a look at the last full year results. We can see that revenues increased by around 57% from 190 to 300 million. Net income and EBIT decreased from around a 15 million loss to a 65 million loss. Gross profit grew in line with revenues to 246 million. So we can see that their gross margin is insanely high at around a 84%-ish. Equity stayed the same roughly with an equity ratio of 37%. Keep in mind though that the first quarter in 2020 still has the pre-pandemic situation. So going forward, the company is guiding around a 25 to 30% growth rate. So these 50+% growth rates they had the last 2 years are not sustainable. On the valuation, we can see that they are not turning a net profit yet, so they don't have a PE ratio. Price to sales ratio currently is around 9. Historically, it has averaged around 20, and last year it was around 40, so very elevated. The price to book ratio also is on a historic low with 8, and the price to free cash flow is around 78. So we can see that even though they are not turning a net profit, they are still cash flow positive, so they are not burning through cash. The Petrovsky S-score always has been around 4. We can see that in the last years, revenue skyrocketed. Over the last 5 years, it increased with around 470%. Net income, on the other hand, has been negative the whole time, and in the last year, these numbers are a little wrong, should be 2020 to 2021. So the net loss increased a little. On the other hand though, we can see that the free cash flow kept increasing and they have been profitable on that basis in the last 2 years. On the balance sheet we can see that they have some debt and some cash, but still they have some net debt, but nothing too serious in my opinion. They have been dilutive in the past, but that's okay as a fast growing and still relatively small business in my opinion. It's something that shareholders need to keep in mind though. And if you look at their numbers, you also should look at per share values. Analysts are expecting their revenues to almost double in the next 2 years, reaching roughly 600 million by 2024. The EBITDA also is expected to more than triple to around 94 million, same as the operating profit, which means in 2024 they should have a operating margin of 16% in the analyst's opinion. Net income should continue to be negative, but I prefer to look at the operating profit for them and on things like the free cash flow. So let's do a summary of Fiverr. They do have high growth rates and have macro tailwinds from the migration from offline to online in the freelancing world, and also from people quitting their 9-to-5 jobs and starting to freelance themselves. They are a potential cash cow due to their marketplace model and their incredibly high gross margin of around 85% and the high take rate. They do have a nice future outlook, but on the other hand, they still have a high valuation relatively, even though it came down a lot from the highs of around I think even 50 price to sales at the top. And they do have new competitors coming into the market with LinkedIn especially. They don't have too much of a technology mode, but that is increasing rapidly in my opinion because they keep integrating more services into their portfolio, like even back-end services where they want to offer a platform for freelancers to stay on even if they don't transact on Fiverr. So for example, that could be some offline business that just uses the backend software to track their work and stuff like that. And that will eventually either convert them to customers on Fiverr once they migrate online, or they could potentially start charging fees in the future and generate revenue that way. So I think that technology side will elevate them in the future, and that they will eventually be the platform to be on for freelancers, no matter what they want to do. Their brand is top notch in my opinion, looking at the Net Promoter Score especially, where they have around 70 and 80 for buyers and sellers. On the experience side, they are high up but not on the highest level, just because they are such a young company, but they still have a lot of experience, going all the way back to 2010. So now on to my outlook. Fiverr has high growth rates, they have a huge total addressable market. They sadly are a potential takeover candidate for many companies, I feel like, which I personally as a long-term shareholder would not like. I don't buy companies to speculate on takeovers, I want to hold them for the next decade. They have a rapidly growing range of products and a great brand. They also have a high valuation though. Fiverr currently has 4% of my portfolio, and I'm looking to keep the company for the long term and potentially even add at these levels. So for the long term I see some serious upside potential personally. So I hope you liked this video, and if you did, please like and subscribe and tune back in for more videos in the future.